Hi, my name is Yugandhar Bhalekar and I am from Patil Institute of Management, Division C, and my roll number is 142. And today I will be talking about contribution and PV ratio in managerial accounting. So, what is contribution? Contribution is also known as marginal cost of sales. It is calculated by deducting variable costs from sales. What are the uses of contribution? Contribution is useful for making the calculation easy to net income and for break-even analysis. Contribution explains the theory between sales and profit. What are the advantages of contribution? It helps managers fixing in the sales price. It also helps in determining suitable products or sales mix. It can also be used for making or buying decisions. It can be used for making decisions like adding and dropping of the product line. The formula for contribution is equal to sales minus marginal or variable cost. Also, there are other formulas for calculating contribution, such as contribution per unit is equal to selling price minus variable or marginal cost per unit, and contribution is also equal to sales multiplied by PV ratio. Now let's talk about the PV ratio. PV ratio is also known as the contribution ratio or marginal ratio. PV ratio is useful for analyzing the profitability of a business concern. It carries out the analysis by studying the relationship between contribution and sales. PV ratio can be used for calculating break-even profit and profit at a certain level of sales or sales volume required for achieving a certain level of profit. The formula for calculating PV ratio is contribution upon sales multiplied by 100 to get the value in percentage. Also, sales minus variable cost divided by sales multiplied by 100, or fixed cost plus profit divided by sales, or if PV ratio is required for two periods, it is calculated as change in profit or contribution divided by the change in sales. Now let's understand this with the help of an numerical or with the help of an example. So in this problem, we have to find out the PV ratio and fixed cost. The given data is sales is rupees 1,20,000, profit is 30,000, and variable cost is 60%. So if the sales is rupees 1,20,000 and the variable cost is 60%, therefore 60% is equal to 1,20,000 into 60 divided by 100, which will come rupees 72,000. Therefore, contribution is equal to sales minus variable cost. Sales 1,20,000 minus 72,000, which is rupees 48,000. So now let's calculate the PV ratio. The formula for PV ratio is contribution upon sales multiplied by 100. The contribution is 48,000 multiplied by sales, which is 1,20,000 multiplied by 100. So it will come 40%. So our PV ratio is 40% and our contribution is rupees 48,000. So this was all about contribution and PV ratio from my side. I hope the basic concept is clear. Thank you.